All right, what's happening, guys? Welcome to tonight's live stream. I'm not really sure what I want to talk about today because I don't really have any plans. I just wanted to start a live stream for you guys, do some live trading, look at Bitcoin, answer a couple of questions, and all that fun stuff. All right, let's run the intro, and right afterwards, we're going to take a look at the Bitcoin. All right, so something interesting is going on here for Bitcoin, right? It's no plan is a good plan. That's right. That's right what it says right there. Trade your plan, not your emotions. So today there's not going to be any trade because there's no plan. All right, you probably want to see the chart and not me my face. So let's just turn that off. So Bitcoin, like I I would like to say that we got rejected here at this resistance area, just as expected, but I'm not going to say that because I'm going to sound like an asshole. But that's really what happened, right? But I want to take you guys back to the last live stream that I had, right, where where we talked about how. So the scenario I talked about in the last live stream was where I wanted to get a daily open and close above this level, which also would be the range highs of the previous range, which is this one right here. Let's extend that to the right a little bit. That's wrong, right? That's right. And with that daily open and close, I also wanted to see a break in SHIB. Why would why would anyone want me to take a look at SHIB? Come on, guys. SHIB is, or I'm gonna take a look at SHIB, but without really looking at the chart, I could. It probably looks like this. All right. Right. Probably looks like that. Let's look at SHIB. Let's do some voodoo. SHIB. Where's the chart? All right, let's load that one. Crypto swings. No, crypto scalps. No, crypto swings. All right, let's look at SHIB. SHIB. Yeah, what do you know? Yeah, so if you're interested in buying Shiba Inu, whatever it's called, please don't. Like save your money for, like, this is a shit coin. It's not only a shit coin, it's a shit coin. All right? Save your money. Don't buy shit like this, especially not when Bitcoin is in a downtrend and it's been rejected at a resistance area, right? If you're interested in buying SHIB, you're looking in the wrong places to make money, right? All right? Like, come on, guys. You know this. You should know better than to look at this and say, this looks good. All right? Because hopefully you're looking at this and you're thinking, wow, what a shitty product. This looks like investors had, just left the room, just let the product, left it to die. But let's do some TA anyway, right? Let's do some TA anyway. Yeah, right. So this looks like this is turning into a short request stream. Let's do that. So yeah, if SHIB for some reason, well, and the only reason for this to reclaim this level, because there's no fundamental reasons for this to move, right? Let's be honest, this is a meme coin. There's no use case at all for this. Like, it shouldn't even exist. There's no use case for this. This is just a shit coin with no fundamentals. If this moves, it moves because of Bitcoin. It moves because of Bitcoin. It doesn't move because it's going to be the future currency of the world or some shit like that. It moves because of Bitcoin, right? So if Bitcoin breaks out and retest this level, like, this level, right? If Bitcoin kind of starts reclaiming like this, yes, SHIB will start to move, right? But it's going to dump with everything else as soon as Bitcoin starts dumping, right? So you look at Bitcoin, right? You look at Bitcoin. So if you're scanning the altcoin market, and you might say like, I'm looking for an altcoin today to buy, and you ignore Bitcoin, you're basically doing crypto wrong, right? Because crypto is Bitcoin at the top. Bitcoin will always be at the top, right? Bitcoin. All right, all right. So I'm gonna be honest with you guys. I don't know shit about Chib, but I know it's a meme coin, right? I'm sure it has metaverse and a lot of utility. But what kind of utility does this coin have? It's a fucking meme coin named after a dog, based on Dogecoin, right? Come on, guys. Does like, how does this coin help me in real life? Yeah, metaverse. Everything has a metaverse. Everything has a metaverse and utility. Like, what is? Come on, guys. Right. Let's not give SHIB too much attention. But yeah, if SHIB with the utility and the metaverse, if it reclaims the daily 20 EMA, it's probably going to skyrocket with Bitcoin, right? But that's the level that it needs to reclaim, like 1300 sats or whatever. All right, let's look at something with much more utility, which is Cardano, which is the product with most utility in the space. All right. I'm being a bit sarcastic, so I'm sorry for all the Cardano fanboys. I hope I'm not like guys. You gotta realize, the way I'm trading is I'm not a fundamental trader. I don't really I don't really care for the fundamentals, right? But we all kind of know what goes wrong, goes wrong with Cardano, right? I'm sure it's a fantastic product. And it's actually something interesting actually happening here. So the one word of advice, right, is if you want to go long in altcoin, and I also talked about this in several previous live streams as well. By the way, guys, if you like my yelling and ranting about the meme coins, please hit that like button and subscribe to the channel, because I'm probably gonna rant, probably going to talk about some other meme coins in the future, perhaps. And yeah. All right. So we got Cardano right here, ADA. And one word of advice: if you guys want to short altcoins, you should only short altcoins if Bitcoin is below the 50 EMA. The daily 50 exponential moving average, right? And it's going to be this gray line right here. So Bitcoin is below it. Yes, that's when you want to short, right? And preferably you also want to short when Bitcoin, this kind of goes back to what I was saying in the beginning, right? Bitcoin is king. Bitcoin is the only thing that matters in crypto, right? When you're trading in the crypto market, you always have to have eyes on Bitcoin, because whatever Bitcoin does, 95% of the altcoins are going to do the same, and chances are you're going to be in that 95% of the altcoins which are going to move with Bitcoin. So if Bitcoin is below the 50 EMA and the 20 EMA, you want to short altcoins, right? And you don't want to short altcoins even if they're in a downtrend, if Bitcoin is above these moving averages. So let's say Bitcoin is above the 50 and the 20 EMA, but altcoins are in a downtrend. It doesn't matter. Yeah, I know shard is small. Let's make it bigger. Look at that. Perfect. Anyway, so yeah, so we look at 88 right here. It looks quite nice. Boulder, Colorado. I love Colorado. I've been to Colorado for, like, a couple of years ago. Great place. I love that place. They're good people. Crazy people. Crazy place. Good place. Anyway. crypto. Sure. So yeah, it looks like there's a possible long here, right? Because and the reason here is, we put the fibs on, from that low to this high right here, and it gives us a nice bounce here around the 50% fib, and it also perfectly hits the 0.618 right here. So it looks like a really good long. If we remove the daily moving averages, this looks like a picture perfect long opportunity, right? If this would be not isolated, but if this would be a forex pair, I would probably go long here on unless there's major news event coming up in the next hours, or tomorrow or something like that. And the reason why I don't want to long this at this point is because one of my rules are, especially for crypto, like, with what I said with Bitcoin, needs to be above the 2050 EMA. But this as an isolated pair and only looking at the 4-hour moving averages looks absolutely fantastic. And how I would trade this, let's go down into the lower time frames here as well. And it's quite obvious right here. So what I would do is I would wait for, we have that stochastics bull cross below 30. It's not only a bull cross, but it gives a nice rounded retest. So let's say we're using replay tool right here. Let's remove the weekly and monthly open as well. Yeah, I'm not saying I'm going to short Cardano. I'm just not. It's not a question of going long or short. It's a question of trading. Should there be a trade at all? And the condition of Bitcoin is telling us that it should probably not be a trade, because I don't think this is going to move. It's not going to decouple from Bitcoin, is what I'm saying. I'm pretty sure it's historically that never happens, right? Not often. So what we're doing here is we're looking at some type of resistance area, right? Or support and resistance area right here. And we're looking at this, and we can definitely say that the reload zone is a beautiful area. The 50% here, beautiful area. If price comes down and hits the 50 or the 0.618, we have a beautiful opportunity here to make some money, or at least take a trade. So what happens? No, I don't care about fundamentals. I don't care about Cardano at all, and I don't really look at any fundamentals happening at all. I only follow price. I only follow TA, because whatever, like, I do know, and this is true for all markets, fundamental news and events move the market, right? Technicals don't move the market, right? But looking at, doing technical analysis in the way that I'm doing it, I'm basically waiting for confirmation and trading the moves that are happening. They will, happen at the same time as fundamental events, right? And usually when you have big players, whales, institution, whatever, when you have big players loading up bags ahead of a big fundamental event, it will most likely happen, in my experience, inside the reload zone, preferably the high time frame reload zone. Let's look at the high time frames just quickly here for Cardano and see where we are trading right now. And I wouldn't be very surprised to see that we're perhaps trading not at all. We're actually way below the reload zone right here. Anyway, so let's just ignore that. But usually what happens is you'll have a chart that kind of looks like this, and you come down into the high time frame reload zone. But that would be like the bigger players looking for a position, at the end of the bear market. And now we're just looking for a swing trade, right? And in that case, you could look at the medium time frame, like the daily and the 4-hour. And right here we see the The reload zone sitting very nicely here at the breakout area. So I'm gonna run the replay tool here, and I'm gonna kind of run it through exactly how I would trade this. So when I'm watching this, I would put in an alert, right? And that alert would be right here. That's my alert, right? Or I could just add an alert on the 4-hour 20 EMA. So I could right click the 4-hour 20 here, add indicator, not add indicator. Right, alert. Oh man, whatever. Let's just put an alert right here. You know what I'm saying? So as soon as price hits that alert, I will get alerted, and this alert will tell me that now's the time to start looking for an entry. And what that entry, what I first need to see is a rounded bottom on the stochastics RSI, and I want to see a bull cross. Now, for me, a bull cross would be where the blue line crosses the gray line, and whatever color scheme you guys have, right? So right here, I would have that rounded bottom right here with a bull cross. And I want to see that bull cross in combination with a bullish engulfing candle on the 4-hour. And preferably, I would like price to come down here, right? And then print a 4-hour bullish engulfing that kind of engulfs the space between the 0.618 and the 50%. So depending on where this candle closes, if this candle closes right above the 50, I'll market enter on the candle close with stop loss below the candle. Depends on the risk to reward. If the risk to reward is very good, I'll give the trade some room and put the stop loss below the reload zone. If the candle, the bullish engulfing candle, closes well above here, I'll put buy orders on the 50% fib, because usually what happens is when you have a strong impulse move, and this is why I call the trading strategy the RLC slingshot, right? Because it acts as a slingshot, and the idea is for price to slowly come down into this zone, and then gather some power, just like you're using a slingshot, and then you're releasing the slingshot, and the target would be the extension reload zone up here. So you see a slow retrace and boom, explosive move to the upside, and it acts as a slingshot down here, and then it brings in momentum, bullish momentum. And usually what happens is you'll see price action bounce inside the reload zone and then use the 50 as an area for the next bounce. And this, I've noticed that this is the best possible entry on that break and retest of the 50. So let's see what happens here, right? Let's see what happens. All right, price comes down. Stochastics RSI is well in the oversold territory. Now we want to see a bull cross in the stochastics. There it is. I think that's the bull cross, right? Yeah, it's the bull cross and the stochastics RSI on the 4-hour, and we have somewhat of a bullish engulfing candle. Now, would this be an entry? This would not be an entry because it closed with a fairly big wick right here, which tells me that there's still some selling pressure here on the 50% as resistance, and that resistance area is also confluent with the 4-hour 20 EMA. So what we do is we wait for extra confirmation. What we want to see now is we want to see a rounded bottom on the stochastics RSI, and we want to see 1 or 2 candles closing above the 50. Now, depending on where they close, I'll put in my orders on the 50 or market buy. And that's what we're looking at, right? Now, what I want to see now is we have a resistance area up here, right? So technically, we could expect price to come up and test this area right here, and then come down and test the 50, right? So this would be the idea. And this happens quite often. Like this price pattern that I'm showing you guys right now, it doesn't happen all the time, but it does happen quite often. And when it happens, the probability of that trade at least hitting TP1, it's quite good, right? So let's see what happens here. If price can come up and perhaps hit the area around this level right here, let's use these highs right here, because you can also look at this level as a zone, right? And that zone could stretch all the way up here. So because the hit of that level, right? Because that's going to be resistance. Let's look for the next candle. You'll see that's hitting that level right there. So now what I want to do is I want to put in some buy orders on the 50% right here to get that perfect entry, right? And now you can also see that the 50 The 50 EMA in the 4 hour is nicely positioned right above the 0.618 and that wick. So let's use that wick and then put it a little bit lower to incorporate these lows right here. To give it some extra room, let's put it below that red line right there. So I'm looking at that wick and then I'm putting it lower below these wicks because it kind of makes sense. This is a strong breakout. Like you're hitting some resistance, strong breakout. So it should be below that level. Let's see if price comes back down to hit this 50 level. Right, and now this is where we're trading currently, right? So what you saw right here is you saw price coming in and hit the lower point of that resistance area, and then you see that wick hitting the 50, filling our orders, right? And this would be now be the trade, right? Let's remove that for the sake of making it, show a little bit cleaner. Now this would be the trade, right? So TP1 would be at the 0% or wherever whatever level makes sense looking at most recent and historic price action. So looking at historic price action right here, I have two levels of interest for TP1, which is either these highs right there or these right here. Obviously, this would give me better risk to reward, but the fact that the lower level is already 2.3R, it's already 2.3R. When it's such a high risk to reward to the first TP, you kind of have to choose that one because it's just going to be, I mean, you got to pay yourself, right? Especially when you're patiently waiting for this to turn, to happen, right? You have the alert right here. So at around 1800 you get the alert, and around 10 in the morning the next day you have an entry. So you've been waiting all night for this, right? And it turns out that it worked perfectly. You get to pay yourself for that patience, right? So that's going to be TP1. So my TP1 is going to be around the 0%, right? This is a great question. I'm going to go through this one later. The answer is probably not going to be what you expect, but yeah, let's run through the leverage question a bit later. Then the next TP is going to be the -236, right? Or a level that makes sense looking at historic price action. So what I'm going to do here, I'm going to put in a TP right on that wick right there, because you obviously have some type of zone here, right? This is support before a proper breakdown, right? This is support level before a strong breakdown. So you can expect that breakdown level to act as resistance. That's going to be your TP2. Now the fibs, and in this case the -236 is just used as a guide on a general area of taking profits. And now the last take profit is going to be at the -618, or a level that makes sense looking at historic price action. And sometimes I like to go to the daily as well to see if there's any better levels here on the daily. And there's definitely looking at the 618, it kind of makes sense to put it here, right? Looking at the daily, I kind of like this level. I like how it's kind of confluent with these right here. It's kind of some type of level here, right? So this would be a really good trade, right? Really good trade. 44% move on Cardano. Now let's calculate the average R of this trade. So let's assume, and this is normally how I do it, I take 25% here, 25% here, and 50 here. But now when you have a risk to reward trade of 6.5, I like to switch this 50 with this 20. So it's 25, 50, and 25. The average R of the trade will be much lower. But the problem, like one of the biggest problems with swing trading, is the time aspect, right? So when you're in a swing trade, right, it's just not, it feels nice just having that, good position, having that, good entry, stop losses entry, and you're just going to let it run. Everyone just talks about letting the trade run, which makes sense. But you got to remember that fundamentals move the markets, and you have no idea what's going to happen tomorrow, right? So the time aspect of swing trading is problematic because the longer you stay in the trade, the longer the higher the probability of that trend reversing, right? So I want to take profits and secure the position earlier if it works, um, if it still gives me a good risk to reward ratio, right? So in this case right here, let's calculate this, right? Now I'm using the Fibonacci retracement tool here, and I have a lot of um, a lot of templates here. And I have one template named range, right? And basically what this does is give me one line at the 1%, or one line at the 100%, one at the 0%, and one at the 50%, just like this. And this gives me a midpoint between the two starting points. So I can use this fib template to easily find the midpoint between the two 25% exit points, right? Which is, remember 25 here and 25 here because I switched them, right? So I draw that from the first 25 to the second 25. So this is going to be my 50% exit point. This is where I exit 50% of the trade. And obviously, because if this is 50, I'm going to be exiting the rest of the 50% here. So logically, my average risk to reward on this trade would be right in the middle of these two. So let's look at that. The average risk to reward on this trade is still going to be 4.25, which is very, very good, right? And I'm getting a 4.25 trade instead of, let's say, a 5R trade if I would have the original TP. But the chances of this trade hitting TP3 is very low. It's actually very low. If it hits, great, I'm making good money, but it's very low probability that it's actually going to hit that level. So I'd rather take some profits a little bit earlier. All right, if you guys have any questions, just let me know. What leverage would you suggest? So first of all, the fact that you're asking this question tells me that you should not be using leverage at all. What I want you to do is go on YouTube and search for leverage trading, how to leverage trade, guide to leverage trading. Take that information that you're learning from those videos and then combine it with the other videos you're going to search for, which is risk management. Google risk management, Google leverage trading, and maybe even Google risk management by using leverage, right? It's super, 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 super important because it does not matter if you use 2x leverage or 10 times leverage or 100 times leverage. It does not matter. All that matters is what amount of money and what percentage of your capital are you losing if stop loss gets hit, right? So if your stop loss gets hit on a 2 times leverage trade and a 100 times leverage trade, it doesn't matter. Like, all that matters is how much are you losing, right? Now let me explain this, right? One golden rule of trading, everyone talks about the 2% rule. You should risk 2% on any trade, but actually I would recommend to use 1% or even lower, maybe as low as a 0.5% or even 0.25% risk per trade, right? So let's assume you're using 1% per trade when you're trading, right? So if you're trading on a if you have a trade setup where the stop loss is, so this, for example, right, this ADA setup is the stop loss is 10% below entry, right? So I enter with everything I have in the account. I enter this trade with everything I have in the account, right? Obviously, what happens now, if my stop loss gets hit, I will lose 10% of my account. So what I have to do is I have to take my trading capital and I have to divide it up into 10 parts. And I will enter this position with 1/10 of my trading capital, right? And I will lose 1%. Simple math. Enter this trade with 1/10 of my trading capital and I will lose 1%. Now, what happens if you put 1/10 of your trading capital on an exchange and you crank up the leverage to 10 and you enter with everything? What happens? You're back to losing 10% on this trade, right? So if you take 10% of your trading capital, put it on an exchange, increase leverage to 10, and then divide that 10% up into 10 equal parts again, that now means that you're entering this trade with 1% of your trading capital, but you get 10 times leverage. So you're only risking 1% on this trade again, right? Because 1% times 10 is 10%. 10% of 10% is 1% of the 100%, right? So what leverage trading really, there's a lot of numbers. I'm confusing myself. I'm probably wrong. I'm not a numbers guy, right? But the important part here is leverage is a risk management tool, right? It's not a tool that you're gonna use to make more money, right? Because if you think leverage is made, it's created for you to make more money, you're just going to be losing more money, right? It's leverage trading is a really good way of losing a lot of money very quickly. But if you use leverage as a risk management tool, it's fantastic, right? Especially in crypto, where you have shady exchanges where you don't want to have your trading capital on. So what you can have is you take 1/10 of your trading capital, put it on the exchange, use 10 times leverage, and you're basically trading with your whole account on that exchange, but you're only risking 10% of your capital, right? So that's a really good lesson here to have, right? Leverage is a risk management tool, and if you're thinking anything else, please go back to the drawing board, learn the basics of risk management, and yeah, guys, like this is super important, right? This is super important. I've lost a lot of money thinking I can make everything back in one trade if I just increase the leverage. Um, it's a pretty shitty thing when you realize the true power of leverage, and the true power of leverage is really to like screw you over quickly. All right, with that said, I want to go back to Bitcoin because we haven't really looked much on Bitcoin today. So I want to go back to Bitcoin here. I'm going to show you my thoughts on Bitcoin. I also want to go through, the high time frames, kind of see where are we in relationship to the high time frame reload zone. So we're going to put on the reload zone right here. We're going to add it to from 0 to 69K. See where we're at. So we're currently in a nice area here below, between the 50 and the 0.618. We've already hit the 0.618. And looking at the weekly, we have a weekly stochastics cross in the making on this weekly candle. Imagine if this weekly candle closes red. It's going to be 1, 2, 3, 4, 5, 6, 7, 8, 9. That's going to be the 10th consecutive red candle for Bitcoin on the weekly chart. I don't think that's going to happen. If it does happen, it doesn't matter. It doesn't matter. Like, nobody cares. Really, it doesn't really matter. I don't think so. It doesn't really matter. But yeah, looking at Bitcoin right here, so it's not looking good, guys. I mean, I'm surprised by the euphoria and the sudden bullishness of crypto Twitter and a lot of people on YouTube, just because we managed to kind of peak above a major resistance area in a downtrend. It's like people, I don't know if they're professional traders or whatever, but it's like people on YouTube and Twitter, like big accounts, it's like all of a sudden they forget about trends. It's like all of a sudden Bitcoin kind of peaks its head above a resistance area, and they're like, I don't give a shit about the fact that the daily trend has been bearish for months and months and months, because we're finally seeing some bullish price action. So now what I'm going to do, I'm going to start buying shit ton of Bitcoin. That's how we get rigged, right? Because in a bear market, in a downtrend, you want to be selling the rallies, right? You want to be selling the rallies in the bear market, right? You want to be buying first when there's a bullish break in market structure, and that bullish break in market structure has to happen on the time frame that defines the trend, right? And do I mean by that, right? Well, first of all, you have a primary trend. That's the higher time frames, right? So you have the primary trend and then the secondary trends, right? And looking at Bitcoin right now, I would say it depends on your perspective. I mean, if you're looking at the very long time frames, you're looking at a couple of years. I'm going to say, the primary trend is still bullish, but the secondary trend and what I think is the most important one right now is very bearish. And the one we should be focused on is the daily trend, right? So what I would say here is we have a downtrend range. Potential start of an uptrend, but that failed because we never really had. Well, actually, if we had this, that would be the start of an uptrend, right? But we had a range and a breakdown. So I'd say, this is an overall downtrend, but inside this downtrend we have a downtrend range and a break below that range and a continuation of the overall downtrend. So what we need to see here for a proper break in market structure is daily higher highs and higher lows. And honestly, guys, it needs to actually, we need to reclaim this level, right? We have a level right here, and this is really it's a massive level, right? But this is really the level that we need to reclaim for Bitcoin to have a potential at a bullish break in market structure. So there's two ways of buying and trading Bitcoin as a long-term investor. Actually, there's two ways, right? First, you have the dollar cost average strategy, which I think 99% of you should be using, because 99% of you are probably going to be making more money using a decent dollar cost average strategy than to actually try to trade this, because I know that most of you watching this do not have a trading system in place. And if you don't have a trading system in place, you're not supposed to be trading, right? Dollar cost average is buy set amount every, weekly or monthly or whatever. It's like a savings account, pretty much. Or you can have a level of interests. And let's say you have a strategy where you're going to be buying every major support on Bitcoin is where you're going to put in buy orders, right? That's the second way of buying this. Or the third way, and that's the way I'm trading, that's the way I'm looking at charts from an investor point of view as well, is I'm selling weakness and buying strength, right? I don't want to be buying something that looks like shit, right? I want to be buying stuff that looks good, something that has recovered, something that has showed me that the bottom is in, right? I need confirmation. Now, trading like this, it's less risky. So obviously, because of the fact that it's less risky, it's going to make me less money, right? And I like that. I like the fact that it's less risky. I like that slightly less risky approach where I'm perhaps making usually I'm missing the bottom, right? So if Bitcoin puts in a bottom and it confirms the bottom and I start buying when there's a bullish break in market structure on the daily, I probably missed like 20, like maybe 20 or 30% of the move, right? But usually when I start buying, we have like, perhaps the 100 or 200% to the local highs where I'm looking to take profits. So for me to double my position, I definitely think it's worth risk, giving away 20%. So imagine if Bitcoin does form a bullish break in market structure and I missed the bottom, right? I missed the bottom, which I'm planning to do. I'm not planning on, buying the bottom. I'm planning on letting you guys try to find the bottom, and then I sweep in when you guys have bought the bottom. I'm like, all right, so now we have a bottom in, I'm going to stop buying, right? So what happens if we have this? I'm not saying you guys, because you guys are smart. You're not gonna try to catch a falling knife. You're gonna be buying when there's a confirmed bottom, right? So we're talking about the other guys, right? So here's the bullish break in market structure, and this is where I buy, right? Perhaps buy right here. And where's the stop loss going to be? Where's the stop loss going to be? Well, you know what? Like probably the first stop loss would probably like 10% below here, so somewhere below 30. But then what I would be doing, like when the trend is alive, I would be using the daily 50 EMA as my trading stop loss target, right? So I would just exit Bitcoin as soon as there's a daily open and close below the daily 50 EMA. So you look at this, and I mean, this is a rather safe trade, in my opinion, a rather safe trade. And we have an obvious resistance up here, a really, really obvious resistance area right in this level right here. So let's assume that this level runs all the way up here. So this is where I will look at taking my first profits, right? Somewhere in this area. Now, it's a good 3R trade. Would definitely be happy with that, right? And imagine you take 25% here, and you could also, you know, imagine you take 25 here, 25 here. And if we're really interested in the, you know, the high time frame targets, you want to be looking at this fib, right? And then this is where we start talking about the long-term targets, right? And for this, we need to have the log scale on. And we're going to be looking at weekly. And we're going to be removing everything except the daily 50 EMA. This fib, I believe, is... I can't use a log scale with this fib. But it doesn't really matter. So if you're looking at this, I mean, now it kind of makes a little sense, honestly. But if you're looking at this from a high time frame, like a long-term perspective, like I know I've talked about the, you know, Bitcoin going to 100K. I remember talking about that as a potential target during the bull run. But what I'm thinking here is, if you really want to look at long-term targets, it's going to be the 0%, the minus 236, and the minus 618. And just because of the fact that this fib is drawn from 0, so the beginning, right, 0 to 61. So it's basically the low and the top of the history of Bitcoin. And I really do like the fact that these fibs right here, from a high time frame perspective, doesn't look too off, right? It doesn't look too off. Now, we don't know if the, like, what I would love to see is the bullish break in market structure happening down here, right? That would be absolutely fantastic. And it really, really does make sense. Look at this. If we're going to draw a massive horizontal level right here, it just makes perfect sense. Look at how that 0.702 comes in perfectly at the 2017 highs, right? Now, what I'm going to show you is something else, and that is the MVRVC score for Bitcoin. I have to Google that. Yeah, it's going to be that one. And then we have NUPL Bitcoin Glassnode, which should be that one, right? These are two very interesting. Nope. I'm not going to upgrade. They're too damn expensive. Man, this is really expensive. No way. Right. So what we're looking at right here is a very bright screen. When you use this just kind of hits you in the face. So if Bitcoin drops down here, now you're going to be screaming like, holy shit, man, he's looking at 15K. Like, don't matter. Don't look at prices. Don't care about what price. Just look at price action. Don't care about if it's 3K or 10K or whatever. That is just psychological, right? You thinking that 10K is low, 3K, 15K, whatever, that's just in your mind. Look at price action. And don't matter what chart this is. Doesn't matter if it's Bitcoin, euro, dollar, or whatever. Just look at price action, look at the levels, and look at what I'm going to show you now. Right. So is it possible for Bitcoin to drop down here? Is it possible? Yes. 100% possible. Is it possible that Bitcoin will put in the bottom here and move to 100K? Yes, it's absolutely possible. I'm not here to tell you what's going to happen. I'm not here to tell you what you're going to be buying. I'm here to tell you what I'm going to do and how I'm going to do it. So hopefully you can take that and, you know, come up with your own idea. That is the main point of all my live streams, is giving you, creative motivation in creating your own plan, because that's all what trading is. It's just a creative endeavor where you create plans and you draw some lines, you create some art on a chart, and make some money by doing that. It's really that's all it is. So I'm just trying to give you some creative motivation on creating your own system, right? Anyway, if Bitcoin drops down here, what will happen with the NUPL? I made a long webinar on this as well, but basically, very simply, what this is if Bitcoin drops down here, we're going to enter the capitulation phase. And historically, when Bitcoin enters that capitulation phase of the net unrealized profit and loss, it is the best buying opportunities, right? The same goes for the MVRVC score. The NUPL is available on Glassnode, but it's very expensive. So if you don't have the money to just buy Glassnode for this, I'm pretty sure you're going to be able to find the NUPL somewhere else for free as well. MVRV C score is available on lookintobitcoin.com for free. And on the MVRC score, it's the same thing, right? When we enter the green area, it's the historically the best time to buy Bitcoin. Now, what happens if this enters the green zone while the NUPL enters the capitulation phase, while Bitcoin hits this level? Well, what we have is a historic confluence, right? Something that doesn't happen very often for Bitcoin, right? Something that very, very rarely happens. And when it happens, if it happens, I believe it's going to be the buying opportunity of a lifetime, right? It's not going to happen a lot, right? And this is something that obviously it's been working, but I don't think it's going to be working for very long, because Bitcoin is entering a phase where we're I don't know when, but Bitcoin will either hit mass adoption or it will disappear, right? It would either hit mass adoption or it's going to disappear, is my opinion, right? And when it does hit mass adoption, we're not going to have bull markets like this one we had in 17 and the recent one we had. We're not going to have bull markets like that one, right? Bitcoin is more and more going to be looking at something like the forex market, where it's going to be like much harder to trade. The bull market is not going to be as obvious, as strong. There's going to be much more stop losses getting hit, and the more institutions that comes into Bitcoin, and the more money that comes into Bitcoin, the more adoption is coming into this. We're not going to see this model work as well, right? We're not going to see this work as well, right? It's the same with the MVRC score, because the volatility on these moves is just insane, right? It's absolutely insane. So this might be the last time, right? This might actually be the last time when you have that reload zone confluence with the on-chain metrics. So I'm not saying this will happen. What I'm saying is, if this happens, I'm willing to put in like a larger part of my net worth into Bitcoin, because I believe that would be the true generational bottom, right? This is where you want to go all in, if you're ever going to go all in on Bitcoin. It might not happen, and if it doesn't happen, that break and retest of the 50% fib at around 35k with the reclaim of the daily 50, it's good enough, right? It's good enough. But with that, like, the risk to reward is it's riskier, right? The risk to reward is going to be lower. Anyway, guys, that's it for me today. I did not plan on doing an hour-long webinar. I just want to do like a half an hour. If you like these webinars, feel free to reach out to me on Twitter. You can follow me on Twitter. I'm at LiBZ42. If you have any questions on anything I'm giving you here tonight, you're free to DM me. I'm getting like a lot of DM yesterday I got like 100 DMs, so it's like it takes a while for me to go through everything. And some of you are asking me some really in-depth question about trading. I'm really trying, doing my best to answer all of you, but at some point it's like it takes a while. But let me know if you have any questions. Anyway, guys, yeah, I'm doing these streams every Tuesday. It's not Tuesday today, it's Thursday, but I'm doing them on Tuesday. And some days I'm just doing this, improvised live streams as well. All right, guys. Thanks everyone for joining, and I hope to see you guys next time. All right, take care.